Hey everyone, welcome to the Bitcoin Perspective. I'm Karu, and today we're going to talk about a fascinating topic in the world of accounting and finance. It's been a few weeks since this news came out, but if you guys haven't heard, we're going to talk about fair accounting for Bitcoin. Let's get into it. Up until now, Bitcoin has been treated as indefinite and intangible by the GAAP. This has significant implications for companies holding Bitcoin on their balance sheets. But before we get into the details, don't forget to subscribe and hit the notification bell to stay on the latest updates on the content. So to understand the significance of fair value accounting, let's first take a look at how Bitcoin was treated historically in accounting. This meant that companies holding Bitcoin had to record it at cost and only mark it down as losses when price decreased. So strangely, any gains in the value of Bitcoin were not recognized, and this created a one-way ratchet function. So to illustrate the problem, let's consider a hypothetical company called Big Crypto Tech. In 2022, Big Crypto Tech purchased 100 Bitcoin at $40,000 each, which they recorded as an asset on their balance sheet. By this year, 2023, Bitcoin's price dropped down to $30,000, resulting in an immediate $1 million loss on Big Crypto Tech's balance sheet. But if Bitcoin's price climbs to $60,000 next year in 2024, Big Crypto Tech wouldn't recognize any of those gains. This basically creates a distorted financial picture. This opacity extended beyond the balance sheet and extended into the P&L, which is the profit and loss statement. Companies had to grapple with the challenge of accurately reflecting their financial performance. Now let's break down why this is such a problem. In the P&L statement, a company's revenue is crucial for understanding its financial health. However, with the old treatment of Bitcoin, its gains couldn't contribute to revenue, but its losses did affect expenses. So let's say once again, Big Crypto Tech had a great year next year, 2024, with a $2 million profit from their core business operations. But this profit didn't include the substantial gain from Bitcoin's price surge, making their financial performance seem less impressive than it actually was. So how did all of this change? Well, thanks to Michael Saylor, there was a significant shift in accounting and the emergence of fair value accounting for Bitcoin. Fair value accounting aims to provide a more accurate reflection of a company's financial position. But what exactly is fair value accounting? Fair value accounting is an approach that measures assets and liabilities at their current market prices. In the case of Bitcoin, it means that its value is updated in real time, reflecting both gains and losses. This adoption method wasn't just a change in accounting standards, but it was definitely a recognition of the increasing importance of Bitcoin in the global economy. Well, how? How do you say? Well, first and foremost, it brings transparency. Companies now have a more accurate representation of their financial health, as Bitcoin's gains and losses are accounted for in both the balance sheet and the P&L statement. And basically what this does, guys, is it allows investors, analysts, and stakeholders to make better informed decisions about their positions. For instance, Mega Payments, a fintech company, will report a substantial increase in their profits once they start accounting for their Bitcoin gains. This should boost investor confidence, leading to an uptick in their stock price. And with Bitcoin continuing to gain traction, we can expect further developments in the accounting standards. Regulatory bodies are likely to refine their guidelines to accommodate the ever-evolving crypto landscape. And as they do, it's crucial for businesses to stay proactive and adapt these changes to maintain financial transparency. And there you have it. Thanks for joining me today, guys, on this topic of fair value accounting for Bitcoin. If you found the content valuable, please leave a thumbs up. And also let me know what you think down in the comment section. What do you guys think about fair value accounting for Bitcoin? Do you think it's going to go anywhere in the future, or do you think this is just something else that's passing by? Let me know in the comments once again. Really appreciate it. And until next time, you guys, stack sats.